And we are 12 hours away from a critical weekly candle close here for Bitcoin, which could officially confirm our breakdown below this EMA ribbon. You can see here, we broke down last week and closed below our EMA ribbon. This week, we are officially staying below it without a quick recovery like we've seen in previous times, like here and here. What could this mean? We've also got a critical week coming up in terms of the economic calendar. On Tuesday, you've got the JOLTS figure. On Wednesday, GDP release. Thursday, PCE inflation. Friday, non-farm payroll. So it's not going to relent. And this is going to be a critical week because the last time that Bitcoin stayed this low on its EMA ribbon and confirmed the close, we ended up falling from levels of 47,000 down to our inevitable lows at 15,500. Could we be set up for more pain here? I'm going to break that down and a lot more. Smash the likes. Don't forget to subscribe, guys. If you appreciate that type of content, you got to let me know in the comments. By the way, new channel, the second channel is now up. Go check that out. Links in description. Long format, right? Not just crypto, other business, investing, wealth building, mindset type of stuff, mentorship type stuff. Go check out that links. Let me know what you think in the comments of that format and if you like that. But here, everything stays the same. Daily crypto updates for you. TA, fundamentals, nothing changes. So make sure you're subscribed on both channels. Okay. So, we are 12 hours away from this close, guys. And what did you think about this, right? We're trying to hold support here at the exponential 200 moving average here, which is this blue line. But the reality is we're now firmly below our EMA ribbon, right? Barring a surprise move here over the next 12 hours, which takes us back above 27.6, we're not going to close above our weekly EMA ribbon. And that means we are now consolidating, confirming our bearish position beneath the EMA ribbon. And this means a couple of things. The first thing it rules out, it means we're not going to get a quick spike back up like we did here, right? Look at this candlestick. We wicked intra-week. During that week, we wicked all the way down there to 19.5, but then the bulls managed to buy back up, and the following week was aggressive, right? Huge move up here, taking you all out. This is what you call a scam wick, taking you guys out, liquidating your panic hands, and then boom, the price is up all the way here to 28.4 before you know it. Right? Similar story here. Came into the EMA ribbon, panicked people out, closed back above the EMA ribbon, followed by another powerful week. That didn't happen this time. Powerful down candle to the downside, closed below, another new candle for this week, closing even lower. So the bears are firmly in control here, and we need to understand that. There's no dip buying going on right now, and the big worrying thing I'm seeing here in the charts, which I've been calling for a while now, is this M pattern. Please, guys, pay attention to this big M pattern forming. I'm just going to take off the EMA ribbon so you guys can see it a little bit more clearly. Bring out this big heavy highlighter so we can't miss it. Look at this. Boom, down, up, down, and boom. We could be breaking this neckline during this week, guys. With the catalyst I've just mentioned, PCE, non-farm payrolls, all these figures coming out this week, we could be losing this neckline. Now, last week, we wicked down and touched this neckline. You can see the wicks of that candlestick and this candlestick. We touched this purple neckline. Right? So if we lose it this week, if we do something like this and come back down, that's going to be painful. If you want to take the measured move of where this type of move could take you, let me just apply this there, apply it to the point of breakout, and this move could bring you all the way down there at 17.5, which is not fun at all. So for me personally, guys, I'm definitely getting ready for some lower price points. There's a very difficult challenge here for Bitcoin to just immediately move to the upside. I'm going to explain why shortly. But if you look at it from the downside, you've got your first pivot point, right? You guys know I've said 24.7. That's the first level I'm looking at, this purple line here from this pivot point. Then I look at the next pivot point, and I'm looking at that pivot point, it's 19.8. Then you look at the bottom of the wedge, which brings you to 16.2. That's what I'm preparing for right now. Keeping it very simple, not getting FOMO'd into the upside to get greedy right now. No, just be patient because Bitcoin just does not look set to go anywhere just yet. I mean, if I show you it from this perspective, let's bring out the EMA ribbon on the daily chart. Look how extended we are away from the daily chart. If I showed you this chart and had you have taken my TA trading program, ijaz.uk/TA, this is glaringly obvious that this is a bear flag. Big move to the downside, consolidation period, and more often than not, 66% of the time roughly, these patterns break to the downside and they continue on another move to the downside, which is why I'm looking out for 25 and 24 a little bit lower, okay? To argue that this is just suddenly going to move all the way back up goes against the data and goes against technical analysis. Doesn't mean it's not possible. Of course, the markets can do anything. Some news could come out, some positive stuff could come out, spot ETF could be approved, and of course, that's why we have to take technicals with the fundamentals, with the macros, and blend it all together, which not a lot of people talk about. But for now, we've got to be very smart. We've got to say, look, this is a consolidation pattern. I'm going to nibble a little bit, but I don't expect 26 to hold for that long. The other evidence I gave you guys in yesterday's videos, we spoke about this Bollinger Band. Look at this Bollinger Band here on the daily, right? Super broken out of pattern due to this move to the downside. But if you drop down to the 4 hourly, look how long it's been constricted for. It's constricting. And anytime a Bollinger Band constricts, it normally sets you up for a big move. It means volatility is about to spike. And when volatility is about to spike, which direction is it most likely to go in? Probabilistically right now, to the downside, right? Just playing those probabilities. Now, what's also interesting, which is again going to be another critical theme for this week, is this dollar index, right? This darned dollar index, which has been unrelenting. And we spoke about this in yesterday's video. This is what's killing crypto right now. 1, 2, 3, 4, 5, 6 weeks in a row. Powerful, strong candlesticks. No big wicking candles like this. There's not been crazy volatility in the dollar index. Dollar index has just been plugging on. Green, 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 green. And if it wants to open up another green candle for this next week, starting from Monday, that could be painful again. Because remember, this is breaking out of the channel and it's working its way to the upside. Where does it want to go to? First pivot point is here, 104.7. Then it wants to head to the next pivot point, 105.9. If we're unable to reject it from one of these levels, either like so, or even to the next one, like a little bit higher and reject it, then we're going to be in for some pain, right? So I'm expecting dollar index to continue to work its way upwards. And if it gets to this pivot point here at the top of the wedge, then that's going to spell pain for Bitcoin. That's going to keep Bitcoin below its weekly EMA ribbon, which is going to be quite worrying. Now, apart from that, what you can see here in total, in terms of the total market cap, we spoke about this yesterday, money continues to flow out of crypto right now. Right? Money is flowing out of crypto. The previous week, we saw 8.3% flow out. This week, less, right? 0.76% flowing out of crypto. But it shows that the dip is not being bought, right? People aren't flooding money into crypto now because they think these are juicy prices. No, they're kind of expecting lower prices. And so I think the market is now getting conditioned that, oh, we could be heading down to 25. A lot of people calling for 24, some calling for 20,000 as well. So you haven't got this crazy appetite to be bidding up the price at 26,000 in its current guise. If you jump on over to Fear and Greed Index, you can see Fear and Greed Index sitting at 38. Again, not crazy fear. That's not crazy fear. We've seen worse fear before, and there could be worse fear to come. And that worse fear will come in around that 20,000 mark when you're getting nervy around 21, 22,000. That's where the fear is going to go into extreme fear, and that's where I want to do my work. You guys know that. I want to do my work when the rest of the market is fearful. When everybody's buying, a bit of a worry sign for me. It's one of my favorite indicators. When everybody's following my taxi driver and everybody else talking about crypto, I'm like, whoa, whoa, whoa. It's a bit of froth in this market. When everybody's fearful, when nobody's talking about it, when volatility is almost dead, no Google searches for crypto, nobody's talking about crypto, nobody's watching these goddamn videos. That's when I roll up my sleeves. That's when I want to be making those purchases. Because you've got to be, to an extent, a contrarian thinker. Hopefully you guys enjoy this update on a Sunday. If you appreciate this type of quick, to-the-point updates, make sure you smash some likes. Don't forget to subscribe. Go watch this video here. And don't forget the second channel. Give us a subscribe there. And I'll see you in the next one.